All right, so I know this is weird for me to say that it's okay to not purchase a home because I just purchased a home. Right? It seems kind of weird coming from me, but I'm gonna tell you right now, it's okay. And for the longest time, I always thought that I would never purchase a home just because of so many factors at play that I'm gonna walk through in this video and tell you why maybe purchasing a home isn't in your best financial interest. Now, most of you know that I lived in New York City, and we all know real estate in New York City is a little bit insane, and maybe it's insane everywhere else now given what's been happening over these past few years. But I will say that for the most part, renting seemed to be more affordable than paying for a mortgage or even being able to save enough for a down payment on a home in New York City. Seemed pretty impossible almost, and we were stuck renting forever is how I thought about it when I first started out my career and when I first started out personal finance. You don't have to trust me here. You can actually go on any website and check how much does it cost to rent that same home and how much does that cost to mortgage for a similar home. Does the rent cost more or less than the mortgage? But also keep in mind that you have a mortgage, but you also are responsible for repairing the home, insurance, maybe PMI, right? So there's a lot of other factors at play here that might increase the actual cost of owning a home, especially if that home is in a high cost of living area where everything is just so much more expensive when it involves housing. Of course, if you wanted to get a little bit more involved, there's a bunch of calculators online to help you figure out what a mortgage might look like. In New York City, for the most part, we're looking at homes that are $500,000, maybe one bedroom, two bedrooms. That's what you're looking for. And maybe you'll be able to save up 20% for a home, which is roughly $100,000. That's a lot of money to put away for a down payment. And we're not even talking about closing costs yet. But of course, if you were to go a little bit lower, let's say 3%, still, it's not an insignificant amount of money when we were talking about $500,000. But just something to keep in mind that it does take quite a while to save up for a home in a high cost of living area. Now, the reason I was able to purchase a home, especially in these crazy circumstances and in the metropolitan area, was the fact that luckily we were both high dual income earners, plus the fact that interest rates hit an all-time low for the first time in many decades. And the most significant thing is that we actually moved out of New York City. But you have to really think about it. Is it worth it to purchase a home versus if I just kept renting, right? There's a lot of trade-offs there. And one of the biggest trade-offs that we've yet to talk about is wealth generation. There's a concept that if I buy a home, I can generate wealth over a period of time because I'm not throwing away my money for rent. Right? I don't think that's an accurate way of looking at it because it's going to be different depending on where you are and what your financial situation looks like. I mean, it may be cheaper or more affordable than renting, but that's not always the case depending on where you are. I would say it's kind of weird that we say, hey, if you buy a home, for sure, 100%, you're going to be making wealth, right? You're going to be generating wealth because you're not paying rent. And then you can pass that wealth on to the next generation, which are your kids. Some people think that, hey, guarantee right here. Maybe that was true sometime in the past, but I would say arguably that's not true anymore, given that there are much better options when it comes to investing. I'm going to prove to you that investing in the stock market is actually a better tool for wealth generation than purchasing a home. When we look at investments, we have to think about the return, right? How much money am I actually making on the money that I put in or invest? And we can look at that with one simple measurement is the return on investment. When we think about the average return on investment for a home versus the stock market, 100% the stock market will almost always beat out homes, right? Maybe there are going to be certain differences depending on where you are, but on average, the stock market gains 7% adjusted for inflation, which if you're looking at the S&P 500, if you invest in mutual funds for that, you're probably going to get 7% on average every year. And it's important that we're talking about the mutual funds and especially the S&P 500 index mutual fund because it means there's no luck involved. Where you're not sitting in front of your computer trying to guess which stock should I pick to make the most money. You're just going to invest in the 500 largest companies. It takes away the whole guessing, the whole sort of figuring out which one is the winning stock. Instead, you're just going to put your money in this index that has generated wealth consistently over the past few decades. Of course, that's just historical data, and you can't assume that it's going to continue in the future, but we can make a pretty good assumption that on average, historically, stocks have performed better than homes. And when we look at homes on a national level, they generate 5.52% on average in growth every year, not accounting for inflation. Right? That's the most important thing. It does not account for inflation. When we really look at it, let's just say generously inflation is 2%. We all know by now that inflation can get really wild, especially in the past year. But let's just say on average, 2% for these past couple of decades. So instead of 5.52%, houses actually grow on average nationally 3.52%. Now the data comes from the median sales price of the United States home on average, right, throughout all the United States. It's going to be different depending on the area you're in. Right? Some people can make the argument that my homes in my area are growing much more than 7% adjusted for inflation every year. If that is true, then congratulations, you live in a neighborhood or a city where the return on your investment for a home is actually higher than the stock market. And it might be in your best financial interest to be invested in a home. But that brings up another question. If the homes are growing in value so fast, are you going to be able to get in early enough and be able to invest in a home before basically you can't afford to buy the home anymore, right? Because you have to keep in mind that the barriers to entry for a home are so much higher. You have to save for closing costs and you have to save for a down payment. And on top of that, you have to pay insurance, repairs, and so on, right? These are all additional costs, meaning you can't just pay the mortgage and be done with it. And let's just say even if the down payment's 3%, that's still 3%. And if you're in a high cost of living area, that can be a lot of money that you have to save up. And we're not even talking about closing costs yet. So it does put a big dent into your wallet when you think about how much do I need to actually save up to buy a home, right? The barrier to entries are much higher. But when you compare it to a stock market, so much lower. All you need is a dollar really, and you can start investing. And there's no fees with it anymore either. Most investments don't have upfront fees anymore. There are other fees when you talk about mutual funds, like expense ratios that are taken out of your investments over time, but that's not like something that will prevent you from investing in the first place. In other words, you can start generating wealth from day one versus having to save up money for a home where your money will just be sitting in the bank account for the next amount of time, depending on how long it takes to save up enough money to actually purchase the home. That time is all lost gains that you could be making in the stock market. Other than the fact that homes have a high barrier to entry, we also have to think about the fact that a home is a very risky asset. When you really think about it, you're purchasing this property, you can't change the location, you can maybe improve it, but global warming could happen, right? You could lose your property. There are just so many factors that are outside of your control, including gentrification, laws, city policies, crime rates, natural disasters, and so on, all of which can negatively or positively impact your property depending on which one we're talking about. Sometimes you might get lucky, your property value can just skyrocket, and sometimes it can do nothing, right? Just stay flat over time, or it will go down, right? At the end of the day, most people, when it comes to this, they just tell themselves, hey, at least I'm not paying rent. But when you really think about it, are you actually generating more wealth than if you were to just rent in the first place? Now, there are a few caveats to this video. The first thing we want to talk about is taxes, right? So I'm aware that depending on how you handle your taxes for any investment vehicle, really, either stocks or for a home, you might be able to benefit more from those taxes, right? So it's better to speak to an accountant to figure out where you stand on that. If you do have a good reason to explain why tax savings for a home will outweigh the returns from the stock market, then I would love to hear it, right? Definitely comment below and let me know. Another one is emotional and health reasons, right? Buying a home is a very good, stable asset in terms of where you will be, right? You don't have to move anymore. You don't think about it anymore. Maybe it's a good place to raise a family, right? So having a place to live and calling it home actually makes a big difference in that respect. But this video is about wealth generation. So really that's our focus here. But we can't ignore the fact that purchasing a home can have an emotional aspect as well, and rightfully so. And one other thing that I did mention, that I'm going to reiterate again, it's market specific. Some markets perform much better than the 3.52% that we talked about. So if that's your market, maybe it might be in your best interest to purchase a property as early as possible before it gets to the point where you can't purchase it. Just keep in mind that the numbers we've seen, the data we've seen, we know as of now that buying a home now is so much more difficult than buying a home decades ago. But it's important to recognize that, hey, you don't always have to buy a home, right? It doesn't have to be the end game. There are many other ways to build wealth, and you shouldn't be ashamed by the fact that you can't buy a home, especially given interest rates are going up. It's more expensive to purchase a home now. If you missed out on the fact that interest rates are at an all-time low, of course not by any fault of your own, right? There are many factors at play here that might have caused you to miss out on that. And because of that, buying a home is seemingly more impossible now. Interest rates are going up. They're around 4% now, and I imagine that they'll keep going up just based on trends and what the data is showing us. So it's very important to keep in mind that, hey, maybe you don't need a home. Maybe you just need to invest in the stock market and build your wealth from there on. And hey, if you make a lot of money in the stock market, then maybe in a few years, decades, you can purchase a home, whether those home prices come down or whether your wealth generation outpaces the increase in home prices, because that's what the data would suggest on average. One last caveat that I want to talk about is real estate doesn't always have to be about purchasing a home for yourself. If you turn real estate into a business, potentially you'll be talking about revenue generating assets, which I'm not focusing on here. Really, it's more about the home value versus the value of the stock market returns. Right? If you're talking about I'm going to buy a home and I'm going to rent it out and it's going to generate income for me, money to pay off the mortgage, to pay off any other costs that might pop up, and I'll get basically free equity. That's a little bit different. The equation is very different in that regard. But then you're playing a different game altogether as a real estate business. But if you do have experience of that, I would love to hear numbers crunching, determining, whether a real estate business would make you more money than if you were investing in the stock market, specifically the S&P 500. Logically speaking, if the goal is wealth generation, then purchasing a home might not be the right path forward. But investing in the stock market is definitely one path forward that on average will generate more wealth. Just remember that buying a home does not define your financial success. Rather, it may be an indicator of financial success, but there are so many other ways to generate wealth. And buying a home might just mean that the stars have to align and you just have to make enough money and the economic environment has to be good enough and the prices have to be low enough to buy it. And that might never happen, or it might happen. We don't know. But just keep in mind that to generate wealth, you just have to be investing in some financial asset, and the stock market is one approach. Hopefully you have a better idea about how a home might compare to the stock market, and just don't feel too bad if you didn't buy a home in the past 2 years. We can't control our financial success to a certain degree when it comes to homes, because homes can kind of go crazy in value, and there is a lot of people hoping that the stock market or the real estate market crashes, and only time will tell. After all, we can't predict the future. Thank you for watching. Make sure to like and subscribe, and I'll see you in the next one.